Hello and welcome to this November edition of Property News. Today I'm going to give you an update on the UK economy, talk about what's happening right now in the property market, give you my predictions for the next couple of months and add a few really important tasks to your to-do list. So my name's Tony Law from Your First Four Houses and my channel's all about helping you replace a job-based income with just a handful of investment properties. So you can give up the day job if you wish and go and do something more interesting with your life. If this is your first time here, be sure to subscribe to the channel and click that bell notification icon so that you don't miss out on any of the free content that I give you each and every week. So first of all, a really quick apology. This November property news is actually 8 days late, and that's purely because I was waiting for the outcome from the US election. I do apologise. So let's start things off by looking at the economy. So after a long and hard fight, on the 7th of November, Joe Biden and Kamala Harris finally announced that they'd won the US election, even though at the time of filming, not all of the results are in yet. Also at the time of filming, President Trump is making accusations of rigged elections and clearly has no intention of smoothly stepping aside to help pave the way for the new administration. Now, I'd be really open about the fact that I personally favoured Joe Biden and I'm really impressed with Kamala Harris, but I also completely respect those who voted for Trump. My sincerest hope is that there can now be a smooth transition from one administration to another, and that in particular the two parties can work together during this transitional period to focus all of their collected efforts on the pandemic, which yesterday in the US saw a new daily record of 132,000 cases. In my opinion, this is where the focus needs to be right now, because if the two parties choose to actively work together in the coming months, they will save lives. With regards to how Biden will impact the UK, well, he has a very different view to Trump on Brexit in particular, doesn't he? And so this may impact trade negotiations with the US. I think it may also influence the way that the UK government approaches the issues of the deal, especially when it comes to Ireland, but we're going to have to wait and see about that. The three-tier system that was rolled out in October was dropped on the 5th of November as the country once again went into full lockdown. But with schools and some businesses still open, there can be no doubt it doesn't feel quite as severe this time round, does it? But with COVID cases rising and with the NHS almost at the point of oversaturation, I personally think it's essential that we all do our best to keep locked down during this period. If we don't, I reckon the lockdown will actually be extended. However, the fantastic news is that on the 9th of November, Pfizer and BioNTech announced that following testing of 43,500 people across 6 countries, they do appear to have a vaccine that is over 90% successful. Obviously, the stock market has reacted in a massively positive way, and obviously things like tourism, hospitality, EasyJet, these kind of companies are obviously just going through the roof at the time of filming. Obviously, the vaccine will firstly be rolled out to those at most risk, but clearly we're seeing light at the end of the tunnel here, which is just awesome. However, for now, the pandemic continues to have a massive effect on the economy, with redundancies sadly at the highest level for 8 years and with unemployment forecasts suggesting a peak of around 8% by the end of this year. In September, we were halfway through the 2020-21 fiscal year, and at that point, cumulative borrowing had reached £208 billion, which is £51 billion above the full year borrowing in 2009/10, which was the peak of the financial crisis. However, on the 5th of November, the government announced it would be pumping an extra $150 billion into the financial system through quantitative easing, and also announced that interest rates would remain at 0.1%. But the good news is that the government also announced the current furloughing system is to be extended until the end of March. And there is now also additional support for the self-employed. This is going to have a massively positive effect on so many people, and it should preserve many jobs until at least the spring. This extended furlough completely replaces the job retention scheme that Rishi Sunak introduced back in October, and I personally think it's nothing but a good thing. In September, inflation rose 0.2% from 0.2% to 0.5% as the Eat Out to Help Out scheme came to an end. And in October, Sky News reported that taxpayers could lose $26 billion on bounce-back loans that turned sour, which is sadly something that I predicted all the way back in July. These loans have proved to be far more popular than originally anticipated, with the total value of outstanding loans expected to be somewhere between 38 to 48 billion, up from an initial estimate for when they were first launched back in May of only 18 to 26 billion. Okay, so moving on to the property market. The average price of property coming to the market increased by 1.1% in October to an all-time national record of £323,530 on average across the country. This is 5.5% higher than a year ago and the highest annual growth rate for 4 years. And actually Rightmove are forecasting that the annual rate of increase will increase further before the end of the year to 7%. In September, they also noted activity hit 3 other records, which are worth mentioning here. Firstly, the average time to sell of 50 days is quicker than ever before. Estate agents have now got more properties marked as sold than they have for sale. This has never ever happened before. And the number of active buyers is 66% higher than a year ago, although marginally down from the 67% in the July peak. In October, Romford MP Andrew Rosindell introduced a new bill called Jasmine's Law. This aims to put an end to the no pets clause found in rental contracts and also aims to support responsible pet owners seeking rental accommodation. As I predicted last month, it looks like lenders are continuing to down value, or at the very least be cautious, or overly cautious in my opinion, in their valuations. And according to new research by Bankrate UK, some 46% of UK homes have been down valued since March. With an ageing population and demographic shift that is seeing the number of people aged 65 and over increasing across the UK, Savills recently noted a real undersupply, especially in Scotland, of quality care homes. This must surely mean there's massive potential for property developers who are playing at this level. And in London, I'm seeing larger volumes of flats coming onto the market, partly due to sellers wanting to cash in on higher sales values. But of course, this increased volume means more choice for the buyer, with the knock-on effect that buyers can be choosy. Understandably, buyers are putting at least some outside space at the top of their wish list, and so flats without any outside space, frankly, they're starting to stick. It's also worth noting that many flat owners, especially in London, are finding sales falling through due to concerns regarding cladding, following, of course, the Grenfell tragedy in 2017. Sadly, I'm one of those people who are trying to sell a flat in London, and unfortunately it's come to a grinding halt for this reason. In December of last year, the External Wall Fire Review process, EWS1 for short, was launched. The EWS1 is a survey that assesses whether a property contains potentially dangerous materials and offers clarity to lenders and, of course, peace of mind for homeowners and buyers. The survey was originally recommended solely for blocks that are 18 metres or higher, but just a month after its launch, the government published revised fire safety standards, stating that potentially dangerous cladding should be removed from all blocks of flats of any height. This effectively means lenders now demand the EWS1 on thousands of buildings that are actually under 18 metres in height before agreeing to loan on them. The result of that is a flat in a block with no EWS1 is probably not mortgageable. So if you're just about to buy or sell a flat, can I strongly suggest you contact your independent mortgage broker right now and ask for their view on this, and be sure to take their advice on this, not mine. In October, Boris Johnson reiterated his frustration at the level of owner occupation by under 40s and expressed his desire for long-term fixed rate mortgages of up to 95% loan to value. The Centre for Policy Studies, the CPS, stated there are more than 3.5 million resentful renters, as they call them, and they proposed a fixed rate 25-year mortgage with a loan to value of 95%. By the way, if you're finding this video in any way helpful, I would really appreciate if you could click on that like button down there, and dare I say it, maybe even share it. It really helps me if that's okay. So just before we move on to the predictions for November, let's just see how my predictions from last month fared. Well, I got the job support scheme prediction completely wrong. I had no idea they were going to be scrapping it. I'm going to put a question mark by this one, and we'll come back to that in a minute. I was sadly right about the lockdown for November. I'm not really seeing enough bigger developers defaulting on loans to tick this one, if I'm being really honest, so let's just leave a question mark here. But surveyors are definitely now submitting lower valuations, and of course Joe Biden did win the US election. So, moving on to my predictions for this month. First of all, I've got to make it absolutely clear that what follows in both this section and my to-do list in a moment are just my personal views, and I may well be wrong. You've got to form your own opinions and do your own due diligence, especially when it comes to any deals that you may be considering. So first of all, I think Trump will continue to fight what he sees as a rigged election well into December. I think the lockdown sadly probably will be extended beyond the 2nd of December, but I reckon it will probably be relaxed before Christmas. Probably because the government recognises probably most people won't adhere to the lockdown were it to actually run over the Christmas period. Just my opinion on that though. Sales of flats without outside spaces in urban areas will slow right down for the reasons that I've already outlined. But the rural housing market will continue to flourish as more people are looking for more space around them and as more people get used to working from home. Now, admittedly, I've carried this one over from last month, but I'm still saying that on average, house prices won't fall before the year is out. I reckon a last-minute deal will be done with the EU regarding Brexit, and actually I think that Biden may well play a part in this, at least perhaps behind the scenes. And lastly, I reckon there'll be an extension to the stamp duty holiday. But again, I may be completely wrong about all of those. And lastly, by the way, let's add a few really important tasks to your to-do list. So first of all, if you are focusing on residential properties right now, can I suggest that you look for deals on houses, not flats? And again, dare I say it, maybe ideally in rural areas rather than urban areas. But if you have to choose flats, you really do need to look for places with at least some outside space, in my opinion. If your focus is commercial, look for deals where you can put your money in, then add a whole load of value, and then pull your money back out again within, say, a year. And I honestly think there's going to be plenty of these types of opportunities coming up if you keep your eyes open over the next few months. And in particular, keep your eyes open at auctions. Never factor capital growth into any of your decision-making process when considering a deal. I talk about that a lot, of course. Always keep in mind you're investing for the long term. I think a lot of people are looking to make very short-term decisions right now. That's not what I actually suggest you do. You should always be taking a long-term view, in my opinion. And this one is actually for the UK government. It's not for you personally. Let's get Test and Trace up and running properly before we come out of lockdown. My sixth point, I would love you to give Burbing a go. Now, you won't have heard of this before. This was introduced by a guy called Ben Locke. He's an Australian living in Melbourne. I'll put the link below. And basically, whilst we're in lockdown, I'm going to encourage you to literally map out every road around where you live. And that means either cycling, in the case of Ben's job, in case of what Ben did, or walking around your area. Mark it on a map. Check out the link below and it will show you exactly what he did, but you can use it to your advantage to uncover fantastic deals. And absolutely lastly, please stay safe and please keep healthy.